Hi, I'm Sam Volkering, editor and investment director at Southbank Investment Research in the UK. I'm here today at the Investors Circle, which companies are set to light up the cannabis industry in 2021 and beyond, where we'll be looking at cannabis, the cannabis industry, cannabis companies and opportunities that exist, and I guess how we've come to this point today. So I'm joined in this Investor Circle conversation by Matt Karnes and Thomas Carroll. Thank you both very much for your time and joining me. Let's kick it off. I'll introduce you both, and then I've got a question that I'd like to level at you both and see what you say. We'll start with you, Matt. So for everyone watching, Matt is the founder of Greenwave Advisors. They provide research and analysis, due diligence, and consulting services to the cannabis industry. Matt's been an analyst, an equities researcher for over 25 years, looking at emerging trends, technologies, and is widely considered as one of America's leading analysts and equities researchers. And Thomas Carroll, of course, the editor of Cannabis Capital, which is one of Stansberry Research's preeminent advisory services on, as you can probably guess by the name, cannabis and the cannabis industry. So again, thanks, gentlemen, for joining me. I want to kick this off, and I'll start with you, Matt. Considering your background and experience and research and equities analysis, what brings you to the cannabis industry? Why did you start Greenwave? And what is it that makes you so excited about this explosion in the cannabis market over the last few years?
Well, thank you very much, Sam, and it's a pleasure to be here today. By way of background, as you mentioned, I served as an equity analyst, but prior to that, I started my career in public accounting. I worked for the Big Four, worked in a few jobs in corporate America, and then went to Wall Street, served as a sell-side analyst as well as a buy-side analyst. And it was in about 2012, well, I founded Greenwave in 2014, but 2012, 2013, when the sort of world was turning upside down, our fund kind of took a different direction. We had a lot of redemptions, and before you know it, things took a turn where we were no longer a fund anymore. At the same time, my mom was sick with cancer, and I used the time off to take care of her. And after she passed away, I was thinking, well, gee, now what? Now what to do? And I was reading about some of these smaller medical marijuana companies. And I thought, well, this is kind of interesting. This is sort of a new niche. And I went up to Boston for the first conference I attended. Some of the people there sparked my interest. I just kept following it that summer. I went out to Colorado for the big conference, which then was about 800 people. To put things in perspective, today it's about last year I think it was like 35,000 for MJ Biz. So that just goes to show how large the industry has got. But when I came back in August, I thought, well, gee, August of 2014, I thought, to utilize that audit and accounting background in a new emerging industry, to connect the dots and read between the lines. And it was very important to have that skill set and then parlay that into what we're doing now. And so that really was the reason for my interest in the sector. And I'm very excited because the growth prospects and the legitimacy of the industry that we outlined in 2014 is now starting to come to fruition. And we're at an inflection point, and it's very exciting right now.
Yeah, absolutely. I think you're on the money when you talk about us being at an inflection point. And Thomas, from your perspective now, you've got an extensive background in research in the healthcare sector. So I guess for me, I can understand the obvious shift into the cannabis opportunity. But do you want to talk a little bit about what shifted your focus onto cannabis? And again, what I guess excites you about this inflection point that we're facing at the moment?
Yeah, thanks, Sam. I appreciate that. Yeah, like you said, I've been in healthcare, finance, and health services research my entire career, and always had some interest on the fringes in medical cannabis and some of the anecdotal stories that we've all read about and heard about for years. And often wondered, why isn't this something we're looking into, as a society? I like to say healthcare is your number one asset. And so we should do everything we can to make it better, right? And I guess I got more involved in probably the 2010, 2011, when a mentor of mine, who was the CEO of Neighbor Care Pharmacy, a big publicly traded pharmacy company, came to me and he said, "Tom, I'm going to start a cannabis company. It's going to be medical." And I said, "Really? That's interesting. I want involved." So I became an investor there, and after doing just a ton of due diligence and really expanding my understanding of this, early stage legal industry, basically came to the conclusion that, look, this is the biggest new market of our generation. And I absolutely want to be involved, certainly from a healthcare perspective, but also from just all the other facets that legal cannabis will touch, across not just the United States but the globe, over probably the next decade. And my personal belief is we're going to see the medical aspects of cannabis far outstrip the opportunities in, its use as a recreational substance like alcohol or cigars or, something like that. So that's really how I came to it and started focusing more of my time on the cannabis space, and opened up a franchise here at Stansberry to focus completely on it. Primarily, our audience is, home offices, small institutional money, and wealthy retail investors.
Yeah, you raise an interesting point there, and you both sort of touch on it around really there being quite a long-standing medical cannabis usage for many decades, actually, across the world. We've seen the use of medicinal cannabis sort of start to branch out, but always be somewhat of a niche. What seems to have been a spark underneath the entire industry that's really led to a lot of investment opportunities on different markets, primarily, I guess, starting in Canada and the US, and now starting to expand a bit further. It's while the underlying medicinal use and the opportunities around medicinal cannabis is strong, and we'll get on to talk about that. It seems as though the recreational legalization of this in different jurisdictions, predominantly again in Canada and the US, is what seems to have caught the imagination of investors, and it seems to have brought the market to life. I'd like to get both your views. Again, we'll start with you, Thomas, on this one. Is government regulation and laws, the way that they're changing, is that the catalyst that investors should be looking for in this market? Or is that just a facade, and that there's a bigger picture playing out regardless of whether or not governments change their laws?
Yeah. So I think what you're getting at is, is federal legalization really a cornerstone to really launching this industry, if I have that correct. And yeah. I think absolutely not. I mean, certainly it's a good thing, but if you look around, cannabis is getting legalized all around us, with all kinds of different data points, and I point to, we've got 40 states now in the United States with some kind of legal cannabis, right? That flies in the face of federal law. You've got the drug Epidiolex, approved by the FDA, a federal agency, out there right now. And, just recently, I think a very strong data point is the SEC, the Securities and Exchange Commission in the United States, just registered shares of Green Thumb, right? And 24 hours later, those shares were sold to an institutional investor in the United States. So I think if you step back and look at all these data points, if you wait to get involved until the president, either this one or the next one, puts pen to paper and signs some type of meaningful legislation, as an investor, you're way, way, way behind the boat. So I think there's a number of things happening right now.
Yeah, and from your perspective, Matt, picking up on what Thomas said there, is it a matter of investors start just really pushing aside this idea of waiting to get into a market like this, and rather just seeing and understanding the bigger picture that's happening, rather than these, big catalysts like the president signing something federally, or, the legalization in a new country recreationally?
Yeah, so I totally agree with Thomas, and it's already a proven market, right? We have a very, very large, robust illicit market in the U.S. There are estimates, nobody really knows, but we know it's big. Really how big it is, several, $20, $70, $80 billion. I think the key, though, for investors and for companies and new entrants into the space is to really be mindful of the high cost of prohibition, because the longer, federal laws are status quo, the more difficult it is going to be for many of these businesses to continue. Most notably is the 280E, the tax associated with IRS code 280E, which imposes roughly on cash flow about, some of these firms are paying like 60 to 70% of their operating cash flow in taxes. So that's one thing. There's added compliance costs associated with the banking issue, having to do with things in all cash and reconciling and all the back office functions associated with this, as many other costs are, enter into the mix. So what I think is going to happen is the larger companies are going to have, that are well capitalized and are able to get checks of $100 million are their survivors. And that the smaller players, maybe some will consolidate, maybe they won't. The ones that don't and just kind of stay in limbo, I think that will provide a very attractive opportunity for the larger players to come in and buy these properties at distressed values, accretive acquisitions at distressed values. So I think that's how it's going to play out. And I think the big risk is really, nobody knows for sure how the industry is going to be regulated once, federal legalization occurs.
Yeah, you pick up on a couple of important points there as well around, so you mentioned the banking issues that the industry has. So people watching may not understand the difficulties that a lot of these companies have faced in terms of even just accessing a bank account, let alone then going on to find capital to grow and expand. Can you expand a little bit on what you mean when you talk about the banking issues that they face?
Yeah, sure. So basically, because cannabis is a Schedule I drug under the definition of the Federal Drug Administration, they're precluded from dealing, having servicing most clients or businesses that operate in a Schedule I drug. So basically, what that means is that many of these businesses have to operate in all cash. Because they're not able to open a bank account. Now, there are some guidelines around that, and FinCEN, the Treasury body within, I believe, the Treasury Department, has issued guidance and says, okay, well, you can bank cannabis companies if they are operating under, the guidelines of federal or state laws. However, there's an enormous compliance burden, and these banks have to ensure that their clients are, in conformity with these requirements. And many banks, particularly the larger ones, don't want to take that risk. So they say, no, we're not doing it. And so that leaves the smaller banks that charge, quite sizable custody fees to maintain these accounts. Now, there's the Safe Banking Act that is on the table now that passed the House that will go to the Senate. And many believe, I think the big picture within the federal framework is, hey, this is a public safety issue now. As the market grows in size and there's more cash floating around, they have to address that because there are robberies and there's known locations and hours and so forth. So that's number one that has to be addressed. And with that presumably will allow more capital, banks to lend to cannabis businesses. But what I would say to that doesn't necessarily mean that the money's going to be flying out the door to these businesses. They still have to have operating cash flows and, check all the boxes that any other, business would have. So it doesn't mean that, there's going to be a sudden flood of liquidity into the space.
Yeah, and I guess the other thing is that when you find that some of them are going to probably struggle to get access to capital, and the capital might not necessarily be there for them to grow. And again, something else that you touched on was this idea around consolidation in the industry and a lot of mergers and acquisitions quite possibly taking place. I mean, we've more recently seen the real big players, so Tilray and Afira coming together for a mega merger. Thomas, in what you're seeing in this sector, in terms of M&A and consolidation in this space, how do you see that playing out over the next few years?
Yeah, I think, and one of our components of kind of how we look at the space this year is, the start of M&A, right? And we've already seen it in the deal that you just mentioned, as well as just this week, right? As we saw another relatively large deal, right? Trulieve, and a big U.S. MSO, primarily in Florida, is acquiring Harvest Health. In basically the first big all publicly traded deal in the cannabis space amongst the U.S. players. So I think that absolutely is going to accelerate. And I agree with Matt that you're going to have you're going to have smaller players in the space that are not publicly traded that do, that have, strong positionings in their markets, like a Curio Wellness here in Maryland, that are going to get acquired at some point for, decent multiples. But kind of after that wave, you're going to run into companies that are perhaps not quite as mature, haven't invested enough, perhaps management team's not as sophisticated, that will either fade away or get acquired at much lower valuations. But yeah, I think at the end of the day, we are at the very beginning of what I think is going to be a big M&A boom in cannabis. And to the point that it's even, part of my investment thesis.
Yeah, absolutely. And so when we look at the companies that investors can get their hands on in the public markets, so obviously the two big markets in this space are Canada and the US. Comfortably, the leaders in terms of the number of companies, the size of the companies, the volumes that are traded, and how investors can get access. I'd like to get your views, each of you, on what the difference is between those markets, whether you see one being more advantageous over the other. Are there going to be more opportunities in something like the US than Canada? And how that dynamic plays out with where investors can actually invest. So we'll kick off with you, Matt. What are your views on this comparison between the kinds of companies we can find on the market in Canada versus that we can find on the market in the US?
Sure. Well, I have to say I favor the US MSOs, the US market over the Canadian LPs. And the primary reason is the oversupply. And really also not only that, there's just an abundance of supply, but just the way a lot of these companies have been managed and, quarter after quarter, they've been missing earnings, they've been bleeding cash. Part of the problem, early on, there was a lot of excitement around Canopy growth and then Constellation Brands coming in, and you had Bruce Linton, and he was, sort of not the best choice, but in my opinion, it was predictable at some point that Constellation would, there was only so much they were going to take of the performance or the lack thereof. And, you had a lot of those situations where you had maybe folks that knew how to manage it, knew a lot about cannabis, knew how to grow it, knew how, a lot of the intricacies, but really didn't know how to manage a business and really didn't know how to communicate with the street. And, that's a big part of the success story for any company, is managing street expectations. So in the US, we're starting to see some real solid performance now, even in, operating under the shadows of federal law. And also, the fact that, as I had mentioned, the high cost of prohibition, eating up most of the cash flow, that there's still positive cash flow that is being generated. Mm-hmm. So those are there's I would say probably about 5 or 6 right now that are hitting that mark and have hit that mark for the last 2 years. And those are the success stories that I think investors should follow. And that includes Trulieve. They had that, a lot of they have a lot of cash flow. That was interesting. This deal, this acquisition was all stock. You have GTI, you have Verano that just emerged. We're going to see a lot of newbies coming in this year. We have Parallel. I mean, it's really exciting, and for no other reason, consolidation I look forward to, just because there'll be fewer earnings calls to have to listen into because there's just way too many. So I just think the performance speaks for itself and the ability to generate cash flow. And it's interesting and it's unfortunate that it provides an opportunity actually that the U.S. is trading at a discount to Canada, and also not only that, the top MSOs trade at a discount to the overall U.S. market if you extrapolate, and it's a reverse for Canada. So anyway,
and what about you, Thomas? Do you share similar sentiment on the U.S. being more favorable than the Canadian market?
Yeah, I do. I mean, when I first started to dive in, and look at these companies with my, financial analyst hat on, I couldn't believe what I was seeing, and really struggled to figure out, okay, why we've got this handful of companies in the United States that have, they're great allocators of capital. They've got sophisticated management teams. They've got decent backing financially, and they're putting up numbers. And, CNBC won't even mention them. All we heard about was, Canopy and Tilray and Aurora, because, right, they are traded on U.S. exchanges. And I think that's how the U.S. investor got introduced to, investable cannabis stocks was by looking at these names that are traded in the United States, but do no business in the United States. Excuse me. So that was a mystery to me. And I think at the end of the day, it comes down to investor access, right? U.S. investors, there's no institutional money or little institutional money getting involved. And the retail investor has kind of been the predominant investor in these names. And been more comfortable, buying a stock on the NASDAQ or the New York Stock Exchange, even though, they were buying a stock in a company that was, far less in terms of far less superior in terms of financials and everything we look for as analysts, than these companies in the United States. And as Matt mentioned, the valuation just seemed really, really crazy to me. So, I mean, I've been telling people for the last 6 months, look, you have to be invested in United States cannabis stocks starting right now. And that's really where we should be focused as investors today.
Yeah, and there's a number of ways, I guess, that people can do that through, specific companies that are listed. There's also, we've obviously seen with the rise of the number of stocks in this sector and the number of public listed stocks, somewhat of an explosion in ETFs. So there are a number of ETFs, I think, POTX, THCX, CNBS, even one called YOLO, which I find fascinating. And for anyone that doesn't know, YOLO actually means you only live once. So it's quite the name for a cannabis ETF. What are both your views in terms of should investors be looking for individual plays, or could they get a balance with exposure to a number of companies through ETFs? Matt, your thoughts?
So I would say it really depends on your, personal preference or risk appetite and your investment objectives. If you want to minimize risk, then you go with an ETF because it's, it has a broad diversification. The one thing I would say, though, is most of the ETFs in the U.S., they're not able to include in the portfolio plant-touching businesses, direct investments into a GTI or Curaleaf or whoever. So what some of them have done is they synthetically create a return that's indexed to these stocks through swaps, through equity swaps. So that's one way to get that exposure. There are also SPACs that are emerging that are becoming more and more popular. The SPACs are, overall, they have like a bad vibe to them, a bad tone. There's been a lot of publicity around them. But, there are very limited choices on the menu for capital in cannabis. And SPACs do provide, can provide an attractive, alternatives for investors. It's just that you have to do a lot more homework and really understand what's underneath.
What you mentioned about SPACs there is interesting because there's been quite a surge in interest in SPACs, not just in the cannabis space, but just SPACs in general in the market for at least the last year. I mean, they're nothing to us. We know they're nothing new, but the explosion in interest is certainly new to the market. And it in somewhat different to a traditional IPO for people which might not understand a special purpose acquisition company, is effectively capital looking for a company as opposed to a company looking for capital. Thomas, are you seeing that there are more SPACs hitting the market that are now focusing on cannabis opportunities, trying, as Matt sort of pointed out, that the capital's there and it may be a better route to market, as it's really a vehicle to market rather than a company itself? Is that something that we should be looking out for as well in terms of SPACs and cannabis companies coming together?
Yeah, I think, the special purpose acquisition corporation is, it's just another way to come to market. And, you've got a lot of money out there that's come out of the public markets that's gone into private equity and it's gone into formulating SPACs, and those places are looking for somewhere to go, and they're perishable, right? So there's a time period where the owner of the SPAC has to make an investment. So that adds a little bit of risk, right? So as you get to the end of that expiration date, I worry that SPACs are pulling the trigger only to get a deal done, right, in order to fulfill all the economics of the founders. So it's another way to go public. I would caution the cannabis companies looking to do this to really look, behind the curtain and see what are the details there, who's running it, what are the economics. And if everything is on par, it's a great way to come public. But to me, it's similar to the reverse takeovers we've seen in Canada. It's just another process. Where you go and you find a mining company and you go through a process and you take it over. The SPACs are kind of doing it, in a different way, but getting ultimately to the end game, the same place.
Yeah, you've actually given me a wonderful segue into a sort of slightly different topic in that sense. As you talk about reverse takeovers of small mining companies, which is something we actually see quite a lot on the Australian stock exchange as well. That again, it's just a route to market more than anything. I'd like to get both of your takes on the international opportunities that we're starting to see now open up. It's clear that the US is a big focus. That there's going to be opportunities in that space, that the Canada and US markets are quite entrenched and somewhat have delivered a roadmap, if you will, of how companies can get to market and the kinds of opportunities that are out there. We saw a similar explosion, I guess, of companies on the Australian Stock Exchange, for example, from 2016 onwards, after the federal government opened up medicinal use cannabis in the country. And what effectively was just a non-existent industry only 5 years ago has exploded to a number of different opportunities and different stocks. Even I know Karnes has done a 50-50 JV out there. And so now Karnes Australia is listed on the Australian Stock Exchange. Can you give me a bit of insight as to where you see the international opportunities opening up, whether it be Australia or now into Europe and the UK? Thomas, what are your thoughts on the international opportunities?
Yeah, no, it's a great question, and it's something that investors in this space need to look at. And again, while we're still very much focused in the United States, we've spent a good bit of time starting to look at opportunities abroad. I think the companies you mentioned, the Canadian-focused operators that are starting to reach beyond the Canadian border are doing so because the Canadian market is just not there, and it's another business opportunity. But places that come to mind for me, I always thought Germany was a really unique market. And again, as a study of healthcare my whole career, the German health system is actually pretty robust, and the German health system actually reimburses for medical cannabis, as a pharmaceutical, just like the United States does for, Lipitor and, statins and all our other medications that we consume here in the United States. So I think that is a really, really interesting market. Of course, Portugal and Spain come to mind as neat places. And then, of course, Australia, as you mentioned, is really starting to see some opportunity. So we're focusing on companies to invest in the space, not necessarily based in those places, but, a company like Cleaver Leaves, right, which is a small organization right now that is looking to, its whole purpose in being is to export, best product to the world, right? Which excludes the United States at this point in time. At the most cost-effective, best capital-efficient means possible. So I would, I guess, caution investors right now that think it's early. I don't know that we see a major driver in European markets or global markets really in the cannabis space, but we are definitely turning a corner there.
And what about you, Matt? What are your thoughts on opportunities that are starting to pop up in the international markets? What are you seeing from your side of things?
Yeah, it's really, really interesting because we're seeing, like, for example, Tilray is, has a relationship with Israel, with Canndoc or Intercure. You're seeing more and more of the Canadian companies forge relationships with other companies, organizations outside the U.S., outside of North America. You're seeing now Curaleaf makes a play for a company in the UK. I think in terms of medical marijuana, I think Europe, as Tom mentioned, and pretty much everywhere else, really leads in medical marijuana. Because in the U.S., research and so forth has been restricted to the University of Mississippi for so many years. And there, to me, in the U.S., medical marijuana is really just sort of like a baby step for rec. There's really no differentiation in the product. I mean, it does serve a purpose. But when you look at the products that are offered in Israel, in Germany, or wherever else, they're really more have that medical, sort of connotation to them. They really feel like they're more pharma grade, and that's the way I think that the industry in general is going to go to, is that you're going to have like 3 different lanes. You'll have the rec, medical, and health and wellness. And I think medical will be redefined and recalibrated. It won't be medical as it exists today and is known today. But I think as it gravitates to the medical lane, I think a lot of the of the products and the ingenuity will come from Europe and other places. So it makes a lot of sense to have these partnerships, sort of in the works now.
Well, if I can quickly add to that, Europe, a lot of European jurisdictions are requiring GMP certification, right, which just raises the bar in terms of quality, and double checks and triple checks to make sure everything that is coming out of a particular plant is what is advertised. You don't see that necessarily in the United States as much, but I think Europe is certainly leading the way in that respect.
Yeah, absolutely. I know that a number of the companies, so in particular here in the UK, we've seen a recent surge in companies listing. I mean, I say recent surge, it's only a handful on the London Stock Exchange, with primarily a focus on the wellness side of things, but also now elements of the medical side of things. Interestingly, a lot of that does come from research that's done in Israel. I know, Matt, you mentioned that, and the same for Australia as well, that a lot of the research from Israel is starting to branch out into different parts of the international market in particular, which I think is certainly opening up, like you said there, Thomas, the quality standards of these products, which is very important. And so I think we'll start to see certainly a greater expansion in the European markets based on that quality, that research that's coming from places like Israel as well.
And one thing I would add.
Sorry, yeah, go ahead, Matt.
I would just say that I think this is one of the bottlenecks in moving forward with federal legalization, is that the federal government is now really coming in and trying to better understand the industry. And I don't think it will move forward until there's assurances as to quality and efficacy and all that kind of thing. So that's, where I think the rubber hits the road right now. But, it's something that I think is going to be a big focus. And
yeah, absolutely. The other thing is you both mentioned it as well in what you've been saying, is you have referred to, and I do it as well, talk about this as being very early stage. Now, for us, having researched this industry for a number of years, it probably doesn't feel like it's very early stage, but to a lot of people that are just starting to see the opportunities in the cannabis space open up, for me, it's somewhat reminiscent to my experiences with the cryptocurrency markets, in terms of you get a lot of negative press, you get a lot of negative coverage and misinformation about what's really happening, and it somewhat skews the average investor's vision away from the bigger story, and they get very hamstrung, I suppose, by some of those negative headlines and the criticisms. It feels like with the cannabis industry, it's similar in that people haven't been ready to have an adult conversation about this market. It's all about these preconceptions about it's just a market for stoners and pot smokers. What are your experiences in terms of how you've seen the mindset of investors changed, and how is that? Do you think we're at a point now where we start to move away from that being early stage and it does become a more adult conversation for investors? What are your thoughts around this, Thomas?
Yeah, no, I think you're spot on with that. In fact, I see parallels, in the healthcare space all over the place. I mean, to use one, about 20 some years ago or so, states in the United States started to shift the healthcare expenses for the poor and disabled. So a program called Medicaid, which was, basically just blank checks being written by state governments to hospitals and doctors, started shifting that program over to a more managed process that was carried out by private companies, many of which ultimately went public. And so early on, I remember being thrown out of a number of offices at portfolio managers and saying, really, you want me to invest in a Medicaid HMO? That's crazy. But at the end of the day, it's very similar, right? You had this big market that was already there that was just slowly migrating over to kind of a different vehicle to get it done, and much more efficiently. And those stocks actually became the darlings kind of 8, 9, 10, 12 years later in kind of the health services space. So I think we're seeing something very similar in cannabis, right? Where you've got this market that's already there. And Matt mentioned it earlier. I mean, what is it? Is it 50? Is it 80? Is it 100 billion? I've seen estimates across that spectrum. And we're just taking that market and shifting it over and giving it to organizations that are, raising the capital, putting the processes and the right people in place, and delivering product that is much better, much safer, and you know what you're getting at the end of the day. People say to me, well, Tom, cannabis is so much stronger today than it used to be. Not really. I mean, you just know what you're getting. Right? Yeah. We're able to create it. 25 years ago, 40 years ago, 60 years ago, you didn't know what you were getting. Today, you can go in, you can buy boom, boom, boom. You get 10 choices of exactly the different concentrations of compounds and terpenes and, all that stuff. I'm not really familiar with all that. I like to say I'm a stock analyst, not a consumer. But you know exactly what you're getting, and you can dial it in.
Yeah, and Matt, it seems like the cannabis space itself is maturing. The companies are maturing. The way they go about it is maturing. Are investors ready to mature along with it? And do you think that's going to see now a flow of the institutional and big money coming to this space as well?
Yeah, I think, it's interesting because I think a lot of the East Coast is really not all familiar with a regulated cannabis market. A couple of people have gone out west or what have you, but really they haven't engaged in the whole process or the whole experience. And, there are a lot of, investors in the New York area. And I think because of their inexperience in the product has led to some reluctancy in investing. This was, a couple of years ago. Now, it's more accepted, right? And as it becomes more accepted and people actually see the product and see what it looks like, and you're buying these products, they're fancy looking, they don't come in plastic baggies like many people would maybe have bought made their purchases years ago. And so I think, as that they're comfortable with, the product, they're more apt to, make an investment for the most part. I also think too, as I talked about earlier, we're at that inflection point where the legitimacy is starting to materialize. And what I mean by that is early on, not a lot of people were willing to come into the cannabis space with any type of pedigree or real work experience. They weren't ready to, jeopardize or risk reputation and so forth. Nobody really knew. When Obama left office, there was still a lot of uncertainty once Trump came in. And, the first step was to clean house. We saw the first step with Bruce Linton when Constellation changed house. And then we're starting to see that more and more and more now. And we're seeing also executives from other industries, Procter & Gamble or you name it, they're on board now. And I think that gives a lot more comfort to investors, notwithstanding the fact that, there is operational improvements and efficiencies. I just think investors have to be mindful that this isn't a normal industry. And as the industry continues to morph, and as there's more, M&A and consolidation, of course, there's going to be swings in margins and so forth, because you can't really handicap the timing and implementation and integration costs. And so, if you would see a swing in margins or whatever other metric you're looking at, in any other industry, most of the time, gotta go, pull the plug, liquidate. I think, investors just have to be mindful of that. And, the growth potential is tremendous. And, you have to really, you can't really look at this for, a quick trade. I mean, I guess you can,
right.
But you should. I wouldn't.
Yeah, absolutely. So in winding up, it's been a very, very fascinating conversation with you both so far, but I want to just put one more thing in front of you before we finish off the session. Bringing out the magical crystal ball, which we're always, as analysts, asked to do. I'd like to get your thoughts on. I'm not going to ask you too long down the track, but in the next, say, 2 to 5 years, I mean, how do you guys see the market and the opportunities that investors will have in that, looking over that time frame? We'll start with you there, Thomas.
Yeah, so I think a few things. I think number one, over that time period, we see, continued maturation of the infrastructure that's out there today, the companies that are working today. I think we see some meaningful federal legislation. So not necessarily, a binary event like everything's legal, but, the Safe Banking Act, perhaps something else that allows capital markets to get more involved. Perhaps those two will be put together. I think once that happens, the big catalyst is getting the U.S. companies traded on U.S. exchanges. I think that could be one of the biggest positive catalysts to the cannabis companies out there today. And then lastly, I think a whole flood of institutional capital will come into the space, right? And that will just move the bar that much further downfield, and continue to blow out the U.S. market and then move globally. So I think right now is like the exact perfect time to be looking at cannabis. I guess you could have invested 5-6 years ago, but look at the charts. They were up and down, up and down, up and down. I think at this point in time, there's real investable companies that are investable. You can buy in your IRA and put away and know they're going to be triples in the next 5 years.
And Matt, quickly, just from you, what are your thoughts over that next 2 to 5 year window?
I would agree with everything Tom mentioned. And what I would add to that is I think that, we'll start to see some morphing into either a big pharma, beverage or tobacco. I think, some of these companies will be teed up to kind of roll into those specific industries. But that's probably a little further down the road than 2 to 5 years. But I think we'll start to see some more acquisitions from tobacco and alcohol and so forth.
Mm-hmm. Fair enough. Well, thank you again both for joining me. It's been a fantastic conversation. Hopefully everyone watching has taken a lot out of it. Again, appreciate your time, and thanks everyone for tuning in to the Investors Circle. Bye for now.
Absolutely.
Thank you.
Bye.